Easy steps to start investing in 2021. Financial education. Hello guys, welcome back to Stacking Stocks and thank you for joining us today. Once again, we bring you some amazing content, so sit back as we make it worthwhile for you. But before we begin, let's have a quick recap of our previous session's discussion. And what did we talk about? If you were here last time, you remember we highlighted 5 stocks that have been undervalued in 2021. If you missed our previous session, don't despair, the video is still up on our channel. So what do we have lined up for you today? As usual, we bring you exclusive and informational content. In today's session, we're discussing the steps to start investing in 2021. You're probably wondering what we have for you on how to start investing your money. And first of all, congratulations! It's not every day that people are willing to risk their money on investments. Investing your money is the most steadfast way of creating wealth over time. If you're a first-time investor, you probably are wondering how to start. How do you make your money work for you? You need to understand how to invest your money before risking your hard-earned cash in any form of investment. But then what are some of the best ways to invest your money? As an investor, I know you're looking for something that will bring you lots of profits. However, do you have any certain investment in mind? One of the best investments is investing in stocks. If you can recall in our previous session, we highlighted 5 undervalued stocks in 2021. What do stocks offer you? Investing in stocks means that you're putting your trust in a company's future success. If the company's stock raises profits, you profit along with them. In the last decade, most investors have keenly been analyzing stocks that have the potential to skyrocket. Nonetheless, invest your money in whichever way works best for you. We can only help you get started, and we're here to help you figure that out. Is your financial footing stable enough to start investing? Have you set up an investment plan? Now, these are some of the questions you should be asking yourself before investing your money. I understand that you are having trouble figuring out your investment plan, but don't worry. We're here to help you get started. Here are some of the things you should consider. First of all, there's style. Are you willing to put your time into investing your money? Then budget. Do you have enough money to invest? And thirdly, risk tolerance. Are you willing to take any financial risks? Those are some of the considerations you should make before investing your money. And that's not the end of it. We're going to have an extensive discussion on these considerations. What impact does style or budget or risk tolerance have on how you invest your money? So let's take a look at step 1, style. Are you willing to put your time into investing your money? How much time are you willing to sacrifice as far as investing your money is concerned? There are key styles involved when it comes to investing your money. There's active investing and passive investing. How do you figure out which camp works best for you? What are the merits of either of the styles? If you're a long-term oriented investor, then both styles have merit. However, your budget, your interests, and your lifestyle and risk tolerance will guide you to your preference for a particular type. What does it mean to be an active investor? It means taking your time to research investments and constructing and maintaining your portfolio on your own. If your plan is to buy and sell individual stocks through an online broker, then you're planning to be an active investor. Now that we've mentioned what it entails to be an active investor, it's imperative to look at the elements of active investing. What do you need? Well, first of all, you need time. As an active investor, you need to do your homework well. What does that mean? Ensure that you research investment opportunities, conduct some basic analysis, and keep up with your investments after you buy them. You surely don't expect your investments to look after themselves. A serious investor ensures that they keep track of their money. Next, you need knowledge. Do you know how to analyze investments? Have you done your research on stocks properly? All the time in the world is inconsequential if you lack knowledge. Even for a first-time investor, you wouldn't invest stocks without understanding the basics of analyzing them. And then you also need to have the desire. Are you willing to spend hours on your investments? If you want to pursue passive investing, there's nothing wrong with that approach. After all, it's historically produced strong returns in the past. On the other hand, active investing promises you superior returns. But remember, when the deal is too good, there's always a catch. In this case, you have to want to spend your time on your investments to get it right. Now, we've gone through what it entails to be an active investor. It's also essential for us to look at the features of passive investing. How much time do you put in your passive investments? The effort required under passive investing is far less. but you still get good results in the long run. In simple terms, you put your money in the investment vehicle, but someone else does the hard work as you wait for returns. Imagine being able to earn without putting much effort into the work. That's what many investors wish for. However, you need to note that the returns are not as promising as witnessed in active investing. In a nutshell, this is what the two styles offer you. Active investing offers more work, more risk, but also more potential reward. You have to conduct a lot of research since it has the potential for huge, life-changing returns. Moreover, you invest yourself or through a portfolio manager. Now, passive investing offers more simplicity, more stability, and also more predictability. It's a hands-off approach with moderate returns and tax advantages. The amount of time you're willing to invest your money is a vital step in investing your money, but that's not where it ends. Now, if you remember, step number 1 was style. Step number 2 now is budget. Do you have enough money to invest? You don't need a large sum of money to start a portfolio. The amount of money you possess is not the most significant step. It merely ensures that you're financially ready to invest. Furthermore, it insulates you from financial challenges during your investment journey. As an investor, always ensure that you have an emergency fund. Once again, we found ourselves talking about emergency funds. Are you joining us for the first time? In one of our sessions, we mentioned that emergency funds insulate you from selling your investments in time of need. Moreover, an emergency fund has the potential to cover your expenses for up to 6 months. Now, what's the next step in your quest to invest your money? Step number 3 is risk tolerance. Are you willing to take any financial risks? As you embark on your investment journey, remember that not all investments are successful. Each investment has its level of risk, but the greater the risk, the greater the returns. Nonetheless, you've got to find the balance between maximizing the returns on your money and finding a risk level you're comfortable with. For first-time investors, ensure that you formulate an investment plan that meets your risk tolerance and financial goals. The point is to ensure that you keep the risk at an appropriate level that suits your needs. Investing money is not an easy task. Suppose you haven't done it before. You'll find it intimidating. However, if you figure out your style, your budget, and also your risk tolerance, you're good to go. That's all we have for you today. Once again, thanks for tuning in to Stacking Stocks. Remember to like, subscribe, and don't forget to share this important investing information with others.